Okay, good afternoon. Good afternoon, everybody. Welcome to Paul's Monday Market Update number 232 for Monday, 27th of July, 2026. I hope you're all well. Hope you've had a good weekend. Hope you're ready for what is likely to be one of the kind of biggest weeks of the year before everybody loses interest and goes on holiday. Okay. If you're joining us for the first time, the Monday Market Update is just that. It is me flying through as much as I can share with you over the next 30 minutes, looking at strength and weakness within the FX indices and commodities markets. A look at a few relevant charts of interest that might be of interest to yourselves, and then a look at the live markets. It is not a signal service. It's not trade recommendations. It's just me sharing with you what I'm looking at, which might actually be of use or interest to yourself in your own trading and investing endeavors. As always, you are very welcome here, but just remember, you're always responsible for your own trading and investing decisions. And if you want a little bit more education, you can join us this afternoon at 2 o'clock London time for the next in the Active Trades Monday Market Matters webinar. The educational piece will be all about should we trade pullbacks or breakouts. If you want to join us for that, you can register on the Active Trades website, or that QR code will take you there. Okay, let's dig into the stamp. So what's this? How do I build it, and what kind of help does it give us? So this is just some snippets from my own weekend work, my own model, the STAM, strength, trend, and momentum, looking to identify the strength and weakness within the FX indices and commodities markets, because I find when I have a better handle on that, that allows me to sort of make the most of my working days, as I'm able to focus my time, energy, and resources accordingly. So what is this telling us? How can we utilize it for ourselves? So here we are. We are into week 31 of the year, 27th of July. Where's the strength and where's the weakness? Well, I do this normally on a Saturday morning. Okay, markets are closed. I get a bit of time to myself and work our way. But in 2026, what the Saturday morning model shows up and what comes out on Monday morning, all right, after we've had an eventful weekend, courtesy of the geopolitical situation we find ourselves in, sometimes that can change a little bit. But, at the end of last week, going into the weekend, what we saw was we had US dollar as top of the pile. And interestingly, with Kiwi dollar in second and Aussie dollar in third. Now, absolutely right that US dollar basically was at top of the pile. We were going into the end of last week with, what were we about? I think we were about, was it about 13 nights of strikes on Iran? But then over the weekend, the kind of the last couple of nights, there haven't been any strikes on Iran, and Iran's had no retaliatory strikes. Now, you can make up your own narrative as to why that is. Is that because the 10-year treasuries hit 4.7, and that sort of freaks out President Trump? He can't afford to have yields going that high. Is it a case that basically they are shot clean, that the US forces are Winchester, they've basically shot off all of their weapons, and need to actually sort of reload? Or is it just a general natural human compassion to basically try and end the actual sort of kinetic warfare? So, as I said, you can choose your own narrative for that, all right? But what we have seen going into the start of this week was invariably that kind of sort of war off, risk on. Maybe not even risk on, but war off, relief rally is probably closer. So we saw dollar weaken a little bit. But with that, as I said, we have seen Aussie and Kiwi, sort of work their way up. A lot of that, I think, is to do with their interest rate hikes, what we've seen in terms of the numbers coming out of those two have shown interest rate hikes and show us the likelihood of further ones as well. And that kind of feeds into sort of this kind of big theme of the week. All right, it is going to be one of the most important weeks of the year, because not only do we have that geopolitical situation, but of course we have central bankers meeting this week, and also we have some of the real major Mag 7 earnings. And the Mag 7 earnings we're going to look at in a moment in the charts of interest. But when we look at the kind of big data, well, invariably, as I said, we've got the geopolitical events, which are going to sort of, as always, knock us about a bit. But then, of course, we have FOMC on Wednesday night. We have invariably. We've also got Bank of England on Thursday and also Bank of Japan. So you've got three of the major central banks coming out with their decision. And of course, that kind of Fed interest rate decision on Wednesday is probably the week's key macro event. But, we've also got US GDP, we've also got PCE inflation data coming out, all right? That's what we're seeing with that. And whilst those central banks aren't expected to make any moves this week in terms of interest rates, everyone's going to be keen to hear what they have to say in terms of the trajectory for the future. Okay, so you have that, and then as I said, you've also got some of the Q2 earnings, okay, numbers coming out, and in particular, what we've got is kind of Microsoft, Meta, Apple, Amazon, them, and a whole host of others. Boeing, Coca-Cola, PayPal, Ferrari, and also the oil guys, okay, Exxon and Chevron at the end of this week. Okay, so you've got all of that coming out. It's going to be a bumper week, lots going on. All right, so things will change, okay, and you should be prepared for the sort of the volatility that ensues. But as I said, dollar has been top of the pile, Kiwi and Aussie, okay, in second and third. What we have seen also is kind of sterling rolling off the top. This is what I was kind of talking about a little bit over the last couple of weeks, that invariably we were having a little bit of a sort of a pump before the dump when it comes to sterling. Okay, what we've seen from the sort of the Northern David Brent, that is the self-coronated messiah of Mr. Burnham. Well, of course, what we've seen is nothing really in terms of any kind of solid policies. All right, just sort of mincing around with a couple of little sort of throwaways to the bread for the masses, shall we say. Basically, really just it's the old deck chairs and the Titanic, and invariably markets, whilst they haven't completely collapsed, I think the fact that we've seen sterling kind of roll away, the fact that we have seen the bond market still ticking higher, has all had that kind of impact on there. Okay, that's just the market's initial reaction to his kind of lack of policy. As I said, a bit of a Northern David Brent, right? Lots to say, but none of it is of any real interest. Okay, so that's what we've seen there with sterling. Euro, okay, continues to sort of weaken. Swiss franc, okay, and Japanese yen, right, picking up the bottom of the pile there. Okay, and of course, as I said, we've got Bank of Japan on Thursday morning. We're not expecting any change, but everybody's going to be keen to say, to see what they actually have to say for themselves. And then Canadian dollar, well, they have done okay because oil had done okay, but of course, then we saw, as I said, with no strikes over the weekend, what we saw is that kind of energy prices fall away. I think it was about 7% at one point, from overnight into the start of this morning, right? So it is a little bit of a mixed picture at the moment. A lot of that is going to get a little even, I could be said, even murkier this week. As I said, you've got geopolitics, you've got central bankers speaking, and major Q2 earnings coming out. Okay, so as I say, prepare for it to be a rather kind of interesting full-on week. Certainly, when we looked at the FX markets coming in to the start of the week, well, that kind of reflected that, because you've had both Aussie and yen strengthening against the dollar, but also kind of Swiss franc, euro, kiwi. So a little bit of a mishmash there. Nothing really to give you any kind of genuine sort of relief rally risk on sentiment there. A little bit of a mashup. And as I said, I think this is going to be a week of it. I think I'll be more interested to see what we're like at the end of this week rather than here at the start of this week. When I'm looking at indices and commodities, okay, what am I seeing there? Well, what we can see is S&P is tactical short, NASDAQ is tactical short, Russell is tactical short. That's what we're seeing there. FTSE remains a strategic buy, but we'll look at the chart of that in a little bit. Nikkei is also a tactical short, ASX strategic buy. Oil, not unsurprisingly, a strategic buy, but as I said, we've had a little bit of a wibble there, all right, in terms of this overnight and into this morning. Interestingly, silver, okay, is in a strategic short. Okay, we'll look at gold and oil and silver in a little bit of a moment. Interestingly, Bitcoin, having been a strategic short, is now kind of flipping to the other side. It is a tactical buy there, and the weekly chart is kind of interesting for us. So we're going to look at that in a moment. So, we're going into a week with tactical shorts on the major US indices, all right, tactical shorts. The question is, will that still be a tactical short at the end of this week? One of the things I'm interested in is that, we had data last week, okay, for like Tesla and Alphabet, etc. And their numbers, well, certainly Alphabet's numbers were okay, but we still sold off. Selling off on good news is normally a bit of a sign that markets are either sort of a little bit tired or a little bit jaded. And so what we're going to want to see is, well, actually, with those, will those other major sort of Mag 7 stocks this week and tech stocks this week, will that basically turn that around, or is this the kind of the sort of sense of what we're going into as we go into these summer months? Looking at just the latest STAM plugin take. So this is just a plugin that people on VTP Stage 2 get. Okay, what's that telling us? Well, it's just showing that actually we had that little bit of a relief rally this morning. Okay, so what you're seeing is that, dollars are kind of in second place at the moment, but strong on the 4-hour. Aussie top, all right, strong on the 4-hour. Kiwi, all right, is holding itself there. Okay, but then, not unsurprisingly, even with the sort of slip in oil price, CAD is holding its own. Euros had a good morning. Sterling continues to weaken. If we look at there, okay, on the intraday sort of 4-hour charts from this morning's session, a little bit of a weakness there, along with that kind of Swiss franc weakness and yen weakness there. So not a major shock. That's pretty much reflecting the sort of the kind of, let's say, the energy sentiment and momentum that we're bringing into this week, based upon what we saw happening over the weekend and what we've got coming up. All right, so let's switch across now to have a little look at some of the charts of interest. So just bear with me for a moment, and we'll switch. We'll switch across there. Just hang on a second. Okay, so here we are, a few charts of interest. There's normally about sort of 4 to 6 charts that you might want to add to your watch list because of either the price action's fascinating, or there's a learning point, or there's an opportunity, or we're running into earnings. This is MAGS, okay? Not unsurprisingly, okay, MAGS on the weekly chart, not unsurprisingly, it's an ETF that reflects the Magnificent Seven, okay? Clues in the name, as always. And as we can see on this weekly chart, we've had, not unsurprisingly, for the last couple of years, it has been, for the most part, in a pretty good, strong uptrend. Yes, there have been some significant pullbacks, as you can see, okay, here, boom. But, what has been interesting for me is that even when it's sort of got beneath the 50, it has managed to reclaim it, okay, pretty quickly, okay, within the next few weeks. And interestingly, even we did that a couple of weeks ago, okay, we came down here close beneath the red weekly 50, but reclaimed it. But the interesting thing for me is that, having put in this kind of, let's call that kind of a micro double top, we then put in a lower high here, okay, 2 weeks ago. And last week's price action took us back beneath the 50. And I would look at that as, that is it's a lower high. That is also actually an evening star, and it's a close beneath the 50. So as I said, I'm going to be interested to see, what this looks like at the end of this week, because we've got Microsoft, Meta on Wednesday after the close, and then we've got Apple and Amazon after the close on Thursday. 4 of the big boys. Okay, so we're going to have to wait and see. As I said earlier, we had Alphabet with good numbers, but we still sold off. Selling off on good numbers, good news. That is something that should prick your ears up, and you want to sort of take an interest in. Okay, so that's why this is on the watch list, to see how this finishes the week. Is this a case that this kind of lower high here was kind of a little bit prescient and gives us an idea of kind of maybe a move further low to $60 on that? So as I said, that's in the watch list. And interestingly, when we start to look at a few of the individual stocks themselves, okay, it gives us, I think, a little bit of a mixed picture, but let's go and have a look at those now. So Meta, or for those of us old enough, okay, still Facebook in your mind. Weekly chart here. Once again, as we just looked at with Mags, it had been in a strong uptrend. And we put in this kind of, just nearly a year ago, this kind of double top here. And really, we've never been back. We've never been back. We were tickling the soft underbelly of $800, but we've never really looked back in every kind of, every high there, hasn't it, and stuff. And so, and having sort of had that kind of $600, we looked at that kind of $600 level, and we thought, well, is it actually making a bit of a double bottom beneath it? What we can see is that, we squeezed, and I'd be curious to hear now to see is that, to me, that weekly chart looks like the 50 period moving average is kind of in control. All right, okay, in the way that it acted as great resistance there, it has continued to do so, and now it's turned down as well, and as I said, we're getting lower highs. So is this a case of us basically, if we get poor numbers, and we can see, already, okay, it's, from last week we were down quite considerably. Are we going to basically, is 600 going to hold? All right, is 600 going to hold, or are we going to see that invariably we kind of drift our way back down to that kind of 550 area? So based upon the numbers, and even if the numbers are good, if we are now into a regime where we're selling off on good news, even as I said, I would be curious to see how this plays. All right, we're here at 600. All right, where's it going to be at the end of this week, and certainly after its numbers on Wednesday evening. Okay, so as I said, you might want to add that to the watch list. Some might say, well, Paul, isn't that just squeezing up a little bit? And I wouldn't disagree with you there. Okay, squeezing up, pivoting around $600 are the numbers, is those earnings numbers, is that the catalyst for the next move, whether it be a strong move higher, which for me needs to get up above the 50 and hold for it to give me kind of a bullish sentiment, or we break lower again, as I said, down towards that kind of 550 area there on Meta. So yeah, watch and shoot, ladies and gentlemen. As I said, it's been a little bit of a mixed picture with some of these, the Mag 7. The other one being Apple. Okay, Apple, they are out Thursday after the close, but actually, having just looked at Mags and having just looked at Meta, Apple is, very much the sort of the exception rather than the rule, and you can see that actually we work our way, continually higher. Okay, and it has been somewhat interesting, an interesting work in terms of its way happening. So we still are seeing, iPhone demand, all right, and growth for the services, all right. They're still sort of driving earnings, all right. Not unsurprisingly, okay, investors are going to be looking for progress on Apple's AI strategy, and the thing is, expectations, they remain high, all right. So we will see whether the numbers actually support that, okay, or do the rug pull, all right. So yeah, so not only will the numbers be important, but not unsurprisingly at the moment, guidance will be just as important as those kind of headline numbers. And it kind of feeds into all of that kind of overall pictures that, investors are interested in all of these, tech companies in terms of their AI spending and their capital expenditure. That is in some ways they're going to be more focused on that than the actual headline earnings themselves, because people are interested to see, well, actually, are they making the right choices in terms of where and how the money's going to be spent, and is it, when and if will we see a return upon that? But certainly, listen, that's in a bull trend, isn't it? That's in a bull trend. Okay, some people might say, well, Paul, is that a hanging man from last week in the weekly chart? You might, you could look at that. All right. As I said, we're just waiting for those numbers. All right, are those numbers going to continue that bullish move there? Because it has been pretty strong, really, hasn't it? Since the kind of March, since the kind of initial ceasefire, it has, for the most part, been pretty a pretty strong leg up, hasn't it? So yeah, let's see how they play out. And whilst the Apple has been good, Amazon not so much. Okay, Amazon has been pretty much like many of the other mags, having what we can see here on this weekly chart is, we had that kind of nice double bottom at the 200 big round number. We rallied hard, like most things in the Nasdaq did. But you can see for yourself, okay, we kind of fell away there, bit of a 1, 2, 3 double top there, back beneath $250. And last week, okay, we closed beneath that 50 there, okay, closed beneath the weekly 50. So, they, of course, Amazon, they're on Thursday after the close, okay. So not unsurprisingly, AWS services, okay, a growth of that cloud, everyone's going to be interested in. And as I just said there, markets, they want reassurance, all right, that the investment in AI is actually going to produce some attractive returns. And then, interestingly, it's almost like the kind of margins on retail, okay, on their retail business and consumer spending trends, they are actually almost like secondary themes these days. Everybody's interested in is that all of this AI investment, is it going to produce anything? Okay, so yeah, it's all going to be about AWS growth and AI capex, all right, likely to drive that share price. Is it going to be the catalyst to basically get us back above 250? All right, bullish, okay, is I think is me, is rather the share being back up above 250. If it is a weak number, well, then invariably I'm looking at us targeting back towards 200. All right, that's where I'd be at the moment. Then we have Microsoft. They are Wednesday after the close as well. Microsoft has been, this weekly chart has been a fascinating chart. We've covered it quite a few times, okay, over the last year or two, mainly because some of the price action has been fascinating. So, from the Trump tantrum there, okay, back in tariff tantrums back in April, where we had that beautiful bullish engulfing, okay, bullish key reversal, all right, and rallied hard into this then, almost like perfect, 1, 2, 3 double top there, okay, just above the $500 before we kind of slid our way down, descending triangle, okay, falling away, looking like we were going to do a monger and bounce off the 200 period moving average, but then we got capped by the 50, okay, which has really has turned its way, rolled over, and we are back down here, and we are here at kind of this 200 period moving average, $360. Is that enough for a double bottom? I look at that. We are underneath the weekly 20, underneath 400, at the 200 period moving average. It's kind of, for me, I look at that once again, this is price coiling up, and I'm expecting the sort of the earnings numbers on Wednesday, apologies. Wednesday evening to be the kind of main drive. That's the way I would look at it. All right. And of course, so everybody's going to be looking at the growth in Azure. All right. Okay. That's going to have the biggest focus. And you've heard me say this a few times. All right. It is going to be about examining kind of AI revenue. All right. Versus the kind of spending on infrastructure. Okay. That's what traders and investors are interested in at the moment. And I think it's not unfair to say that these results from Microsoft, they could kind of set the tone for the overall wider AI sector, right? So it's it's going to be, as I said, it's going to be a big week. It's going to be an interesting week, all right? And I think Wednesday after close and Thursday after close, okay? And remember, Wednesday you've also got FOMC, and Thursday morning you've got Bank of Japan, and then you've got Bank of England. It's going to be an interesting few days, ladies and gentlemen, all right? So there we go. But it isn't all tech firms and Mag 7 stocks. Friday, we also see some of the oil stocks. Okay, we've got Exxon, but then also Chevron here, right? Not unsurprisingly, oil prices, they remain the biggest driver of sentiment at the moment. There's no shock there. And I think people are going to want to understand how recent energy price volatility, how that has impacted earnings. Okay, so people are going to be looking at its cash flows, its dividends, buybacks. Okay, they're all going to remain kind of pretty central to the overall investment case. So yes, we've seen a lot of volatility in Chevron, but also you need to keep on top of the crude oil price, okay, and naturally any sort of geopolitical developments that we see between now and Friday and in the present world we live in. Well, of course, we can see them. There can be lots of that. Listen, we looked at these at the start of the year. This was Venezuela, all right? That's when Venezuela happened. We gapped up and we ran up, okay, and then sort of turned into the Iran conflict. And then, okay, of course, there was the sort of supposed peace deal and ceasefires, and price kind of fell away. And interestingly, we kind of fell to this sort of, where the 50 is, 170 area. We did I'd look at that as a kind of morning star formation. And as you can see, the kind of bombing of the resumption of kinetic operations against Iran, seeing the oil price bump up to nearly 100. And then invariably that has also been reflected in the Chevron share price. But you can see there, even though the pre-market looks like it's down about $8, almost $8 based upon what we were talking about. Okay, in terms of they have not gone, or those kinetic operations have come to an end. All right, and as I said, you can make up your own decision as to why they've come to an end. Ultimately, as traders, we're just interested in how the market's reacted to it, and so that's why we saw drops in oil price today. Also, why we're seeing the pre-market drop in Chevron. but I'll be interested. What are the geopolitical say? What are the overall implications for the economy based upon the kind of the comments from Mr. Varsh on the FOMC on Wednesday, and then of course the actual numbers themselves, the earnings for Chevron and Exxon on Friday. So bumper week all round, ladies and gentlemen. All right, plenty for you to get your teeth into, plenty for you to watch, but equally, make sure that if you are trading this week, make sure that you are, as always, on top of the news flow, on top of the order flow, and on top of your risk management. So there's the chart of interest. Let's switch across to the live markets now and let's see what's going on, shall we? So just bear with me for a moment and we'll kind of try and bring that up and get on with it. Okay, so here we are now. Yeah, this is one of my other platforms. Okay, and this is set up for kind of indices, commodities. So here we have Dow on the weekly, Nasdaq on the weekly, S&P 500 on the weekly, Russell on the weekly, FTSE on the weekly, Nikkei on the weekly, DAX on the weekly, oil on the weekly. Okay, so we can look at oil very, very quickly. We've just looked at Chevron. Hey presto, doesn't the weekly chart on oil just look exactly like the weekly chart on Chevron? What a shocker, eh? What an absolute shocker. But there, as you can see, all right, from where we closed last week, okay, to where we've opened, all right, you can see that basically we had quite a move there. I've just gone down to the 30-minute chart there. It kind of has a nice, sort of look at that. Thursday, we top out with a nice bearish engulfing, bearish key reversal candle. We'll just work our way lower and lower and lower, and then gap down, okay, and then continue to sort of move our way lower. This morning, that I would be saying that is a kind of an indication that the kinetic is over for the moment. But how many times have we said that this year, ladies and gentlemen? But there we go. That's oil and Chevron. What I'm kind of probably interested in is based on the fact that we've just looked at mags, those some of those stocks as well. What's going on with the actual overall Nasdaq index. And let's zoom in here on the weekly chart. We had that fantastic run, didn't we? Have that fantastic run followed by what I would view as we talked about this, a double top that had basically a bearish engulfing candle key reversal followed by another bearish candle key reversal. Looking at kind of around about sort of 29,000, sort of almost like neckline, which over the last couple of weeks we have now worked our way lower on. All right, so once again, I'm going to be fascinated to see how is this by the end of the week. Okay, is this just a liquidity grab before the numbers support us on a move higher? I have no doubt that President Trump and many others would love that, but the reality is, I'm just going to have to wait and see how the price plays out. The thing that interests me is here, if I go down to the daily chart, if you look at that for almost the last 2 months, the Nasdaq daily chart has been pretty challenging. And the thing for me is that we flipped the 50, right? We've flipped the daily 50. See how it's gone from being support to then being resistance for us moving lower. Now, of course, every man and his dog is loving not only the kind of Mag 7, but also tech stocks, AI stocks, okay? And they're all getting a little bit het up because, not many of them are following through, or lots of them have fallen away, and it's no surprise, okay? It's a very simple rule of thumb. If you want to be, buying tech stocks, well, being above the daily 50 is probably a good starting place in terms of understanding context. And when we are here and drifting lower, that's no surprise that perhaps maybe we're seeing some of the kind of the dreariness in all of those kind of tech stocks. S&P 500 isn't as bad, all right, in terms of Nasdaq hasn't fallen its way through, but once again we did have that engulfing candle, and we're kind of making sort of swinging kind of lower highs there, okay, that kind of levels we're seeing there, and it's a case of we are kind of drifting away, right? And once again, we at the end of last week we finally had a close beneath the daily 50. Now, of course, we've bumped today. Is that a case of where are we going to be at the end of this week? Are we going to be nicely above the daily 50 and daily 20? To me, that's bullish. Or are we, back beneath that 50? Okay, which I would say is pretty bearish going into the sort of, August summer breaks for myself. All right, and that's what we're just seeing there across those. A little bit closer to home. All right, DAX has, you've heard me talk about this all year, namely how every time it's got above 25,000, it's kind of struggled to stay there. I thought that spell had been broken a few weeks ago when we powered our way north, but you can see we came back down. But relief rally has bumped us up, hasn't it? A relief rally is a little bumped up. Look at that today and stuff, and just look at that on the daily chart here for the last couple of weeks, where we have literally just pivoted around 25,000, sort of back and forth, right around the kind of moving average, around that big number. And once again, is this a case of the spell is broken, or are we going to pop up, double top, and come down into August? Once again, as I said, we'll be interested to see where this is at the end of this week. All right, so as I said, I'm kind of more curious about charts again on Friday than I am today. And also closer to home, all right, FTSE. Now, I talked about how I thought we were coiling up on the FTSE there. We have managed to break out of it. We have managed to stay above the weekly 20 and the weekly 50. We managed to be in Stan 1 Bravo. I wouldn't exactly say that is just filling me with absolute joy, but then there's a case of I have no doubt that Mr. Burnham will try and claim the benefits for that, but the reality is that you've got energy and defence stocks making up an awful lot of the FTSE. You've also got sterling weakening a little bit as well. So I think it's more to do with that rather than any renewed vigor in the FTSE due to domestic politics. As I said, we'll have a look at gold. Bang, we talked about this a few weeks ago. Gold weekly chart. Here we are, down at 4,000. I see 4,000 still acting as kind of big round number there. Solid support. Can it base itself there? Well, I think part of that is to do with whether we get some dollar weakness. All right. Why would we get dollar weakness? Well, you'd get kind of dollar weakness if you're going to get if you're going to get bonds rising, okay, yields dropping, and the likes, okay, that will have an impact, and also that kind of a bit of the risk on sentiment, if that can hold that. And then of course Mr. Valsh's comments. So, but yeah, look at that. The weekly chart, I think we just sat at 4,000, right? You can see on the daily chart there, okay. The question is, is there, what is going to likely to happen that will basically either pump gold back up above that 50 and above 4,200, or what is it that could break that 4,000? I don't think it's anything to do with gold. It's stuff going on elsewhere. All right, stuff going on elsewhere. And in particular, I think kind of maybe the treasuries markets, okay, and the Japanese bond markets that may be the driver of that when it comes to gold. Silver has also been in kind of a little bit of a drift lower, whereas gold has been sat on 4,000. Personally, I see silver now. We are kind of tucked underneath $60. That's the way I look at us there. We kind of did flush to a little bit of a low here from last month, and we popped our way up. All right, I see that we are beneath 60. My view is that if there is another peace deal, all right, another peace deal, another week, another peace deal, if that happens, well then that's seen as good for silver because it's got industrial usage, so that kind of works our way higher, right? But if we go back kinetic again, I think actually silver works its way lower there. So that's what I'll be looking at there. And then Bitcoin on the weekly chart, I said it's gone Stan 2 Bravo. And we've talked about this for the last couple of months, how we had been in a downtrend for this year, but 60,000 and the weekly 200 period moving average has acted as pretty solid support again. Yeah, you might say, well, Paul, those candles aren't exactly filling me with immense joy and strength and momentum, and I'd agree with you there. But the fact that we kind of seem to have based at 60, all right, holding above the 200, that to me is that's worthy of consideration. When I go to the daily chart, okay, we start here the month here with a really nice bullish engulfing, bullish key reversal candle. We then PO20'd, right? Whereas the 20 was acting as resistance here. See how it's acting as dynamic resistance there? It's then turned into dynamic support. 20's gone flat, 20's turned up, 20's bounced off it. And so far, we are now, price is above the 20, which is above the 50. So is this, as I said, just a slow work higher, okay, from Bitcoin? Hence why, I might be interested in this at the moment. and naturally, a lot of that is all to do with gold, silver, and Bitcoin and oil. A lot of that is all to do with the dollar. So I know we've overrun a little bit today. I'm just going to look at dollar and sterling. Okay, I'll do more on the FX work pairs in tomorrow's stage 2 call. So okay, so here we go. Dollar. My dollar profile, what I've got here: Aussie dollar on the daily, Euro dollar on the daily, pound dollar on the daily, dollar Swiss on the daily, Kiwi dollar, dollar CAD, dollar yen on that weekly chart, and the dollar index. Okay, so whenever I look at the FX world, I'm always starting with the dollar index. I want to see what the scores and the doors are. Weekly chart, okay. Not the prettiest bull flag I've ever seen, but it's following through on that so far. This is kind of war on. This is kind of war off where we've kind of dropped here. Okay, we can see it. The daily chart, we had worked our way up here. We were the 20-period moving average is flat, but so far we are above the 20. All right, we're above the 50. When I go down to the 4-hour chart, we bounced nicely off that 200 and worked our way higher. We gapped down. Okay, we gapped down here because we thought we had a bit of a relief rally. Interestingly, so far this morning, okay, that is kind of we're kind of working our way higher. So I'm going to be curious to see what is Trump coming out with this afternoon. That's what I'd be looking with there. But when I look at the dollar index and I look at those major dollar pairs, what I'm kind of curious about here is, listen, Aussie dollar on the daily. Now Aussie has been strengthening, but if we look at that for the last 2 weeks, not terribly pretty price action. And what I'm interested in seeing is that, here's the daily 50 coming down, the daily 20, the daily 200, and price in between. This is price coiling up in front of this particular week. There's a version of it even with Kiwi dollar, 20's coming up, prices at the 50, 200 is above. Okay, we're kind of coiling up a little bit. Definitely see it on the dollar CAD. Okay, we can see that basically the 20 is heading down, the 50 is heading up. Price for the last week has been caught in the middle of that on that particular coil there, isn't it? It really is. And that's kind of given me an indication of, we are waiting for some of this data this week to give us the breaks that we particularly are looking for. And certainly dollar yen on that weekly chart, listen, that weekly chart, that's the highest weekly close in 40 odd years. All right. And so, what is going to happen between Mr. Varsh and the FOMC on Wednesday night and the Bank of Japan on Thursday morning? Okay. We shall wait and see. All right, we shall have to wait and see. Okay, to see if anything does to basically halt this slide. Okay, I have no doubt there'll be more intervention. It's whether it really be worth it, whether it will make any difference whatsoever, ladies and gentlemen. That's what we're looking at there. All right, as always, let's finish with sterling. Okay, cable on the daily, euro sterling on the daily, pound Aussie on the daily, pound CAD, pound yen, pound Swiss, pound Kiwi, FTSE. All right, we've looked at FTSE. It kind of has worked its way up there a little bit, hasn't it? If we look at pound against dollar, all right, pound against dollar, pound has weakened against the dollar there, and yet price and the moving averages are pretty much in that kind of gloop together that we saw. That is kind of sterling weakening since, since Mr. Burnham has taken on. Pound against yen. Yen has been bottom of the stam, and yet sterling has still managed to weaken, over the last couple of weeks on that. Swiss franc has also been in the bottom of the pile. Okay, and yet, okay, if we look at it, sterling and Swiss franc has just kind of gone sideways for the last week to 10 days. If we look at pound against Aussie, now admittedly Aussie has been strengthening anyway, but you can see pound against Aussie, well, sterling weakening, Aussie strengthening. Pound against New Zealand dollar. All right, New Zealand dollar, bang, strengthening, sterling weakening. Pound against Canadian dollar. Okay, sterling weakening, Canadian dollar strengthening. Euro against the sterling. Okay, that is literally bang, euro strengthening, sterling weakening. Okay, that's probably giving us an indication there. Okay, of how market's initial reaction has been to Mr. Burnham. As I said, personally, I think he's just tinkering with it's the deck chairs and the Titanic, and what it's going to mean is that autumn budget that autumn budget is going to be a major risk event. And that is what I think the world and his wife is going to be basically waiting for now. He has done a fantastic job of maneuvering himself into position. Now they go away on summer recess and they'll do this and that to basically avoid him coming under any kind of real scrutiny. He'll ride out his honeymoon period, and then we'll probably all see how much we're getting stiffed in the autumn budget. But as you can see, sterling, the initial reactions has been very much to weaken across the board there. All right, there we go, ladies and gentlemen. Let's draw it to a close there. I appreciate that, we overran a little bit, but, huge amounts going on this week. Really, one of the most important weeks of the year, I would suggest. So, as always, I wish you the best of success in your own trading and investing endeavors this week. Remember what I was just saying. Make sure you're on top of the news flow, both the formal calendar and just the general, news flow itself. Keep on top of your order flow, keep on top of the STAM, all right? Keep on top of your risk management, and I hope you have a great trading week, and we'll be back next week, and next week will be the last one before our summer break. So I hope to see you then. Take care and trade well, everybody. Cheers.